Hello, and welcome back to the channel. I'm Algabot, and I build and break down automated trading systems for the MetaTrader 5 platform. In today's video, we're going to explore an expert advisor called Range Weighted Value Reversion. This is a mean reversion strategy with an unusual twist. Instead of using a standard moving average as its fair value anchor, it builds a custom acceptance value line that leans on the quietest bars in the window. By the end, you'll understand how it finds balance, how it measures stretch, and exactly how it enters and exits. Let's dig in. And remember, everything here is educational only, never financial advice. So what exactly does range-weighted value reversion do? At its heart, this is a mean reversion expert advisor. That means it doesn't chase momentum or try to ride long trends. Instead, it waits for price to travel too far from what it considers fair value, and then it looks for a snapback toward that value. The strategy is built entirely from raw bar geometry, the open, high, low, and close of each candle, so it doesn't rely on any packaged library indicators. The centerpiece is a custom anchor the code calls the acceptance value. Most fair value tools, like a simple moving average or a volume-weighted average price, treat every bar equally. The problem is that the widest, most dramatic bars, the ones where price is leaving value in a hurry, pull those averages around the most. This strategy flips that idea. It weights each bar by how quiet it was. A tight, low-range bar, where price was being calmly accepted, counts close to full weight. A wide, climactic excursion bar is pushed toward almost zero weight. The result is a line that sits where the market has actually been doing most of its business, a cleaner center of gravity to revert to. There's also a regime filter. The strategy only looks for fades when the market is in balance. It measures the least squares drift of closing prices across the window, and if that drift is too steep, it stands aside, because a trending market is not the place for a reversion idea. Who is this style suited to, in an educational sense? It's aimed at people who are curious about range and balance trading, about counter-trend entries with defined risk, and about how thoughtful weighting can change a familiar indicator. It can be studied on any symbol and time frame you attach it to. As always, this is information for study, not financial advice. Let's walk through the mechanics step by step. The expert advisor evaluates its rules once per completed bar, so it isn't reacting to every tick. On each new bar, it first checks that enough history exists and that there isn't already an open position carrying its magic number. It only holds one position at a time, and it lets the stop loss and take profit manage the exit. Next, it builds the acceptance value. It loops back over the value period, 30 bars by default, and computes the average bar range. Then it makes a second pass, giving each bar a weight equal to the average range squared, divided by that bar's range squared plus the average range squared. Quiet bars land near a weight of 1, while wide bars fade toward 0. It applies those weights to each bar's typical price, the average of high, low, and close, to produce the weighted acceptance value. In that same loop, it fits a least squares line through the closes to measure the window's drift. It also computes an average true range manually from the true ranges of recent bars, using an ATR period of 14 by default. Now the gates. The strategy multiplies drift by the window length and compares it to the flat drift setting, 1.5 ATRs by default. If the window is drifting more than that, it's trending, and the EA does nothing. This is the balance filter. If the market is flat enough, it measures deviation, the last closed bar's close minus the acceptance value, and compares it to the deviation setting, 2 ATRs by default. For a long, the close must be stretched below value by at least that amount, and the last bar must show a bullish turn, closing above its own open and above the prior close. When both are true, the EA buys at the ask, sets its take profit exactly at the acceptance value, and places its stop 1.5 ATRs below entry. The short side mirrors this. Price must be stretched above value by the deviation amount, and the last bar must print a bearish turn, closing below its open and below the prior close. The EA then sells at the bid, targets the acceptance value, and sets its stop above entry. In both cases, the reversion thesis is simple: return to where value lives. Here's the core of the code as it appears in MetaTrader. At the top are the input parameters you can adjust. ValuePeriod sets the lookback for the acceptance value line and its drift. ATR period controls the average true range that scales both the deviation distance and the stop. Deviation ATR is how far price must stretch from value before a fade is considered, defaulting to 2. FlatDriftAtr is the ranging gate, and stop ATR is the protective stop distance. Lot sets the trade size. Just above the signal blocks, the code computes deviation as the last close minus the value line, and a trigger equal to deviation ATR times the current ATR. Look at the long block. The Boolean bullish turn is true when the last close is above the last open and above the prior close. The condition says, if deviation is less than or equal to minus the trigger, meaning price is stretched below value, and we have that bullish turn, then buy. Entry is taken at the ask. The take profit is set directly to the value line, and the stop is entry minus stop ATR times ATR. The short block is the mirror image. Bearish turn is true when the last close is below the last open and below the prior close. If deviation is greater than or equal to the trigger, meaning price is stretched above value, and the bar shows that bearish turn, the EA sells at the bid. Take profit is again the value line, and the stop sits at entry plus stop ATR times ATR. Notice both sides confirm the stop and target are on the correct sides of entry before sending the order. Let's bring this to life on the chart. Across the screen you can see our price candles, and drawn over them are 3 lines. The middle line is the acceptance value, the range-weighted center of gravity we just described. Above and below it sit the 2 trigger bands, each place the deviation distance of 2 ATRs away from value. Notice how flat and level the acceptance line is here. That flatness is exactly what the balance filter is looking for. The window's drift is small, so the strategy is willing to fade. Follow the first few candles on the left. Price is hovering politely around the acceptance value, ticking a little above and a little below. These are the quiet, accepted bars, the very bars that carry the most weight in building the value line. There's no stretch yet, so the strategy simply watches and waits. Then the mood changes. Watch as several candles push lower, one after another, each closing beneath the last. Price is now traveling away from value, and it slides down through the lower trigger band. On the next candle it drives even further, printing a fresh low well below that band. At this moment the deviation has grown to more than 2 ATRs below the acceptance value. The first condition for a long is now satisfied. Price is genuinely stretched. But the strategy doesn't buy on stretch alone. It wants proof that the move is losing steam. Look at the following candle. It opens near the lows, but it closes back up, above its own open and above the prior candle's close. That's the bullish turn the code requires. With stretch below value and a turn back toward it, the buy entry is placed at the ask, shown by the buy marker. The stop sits below the recent low, about 1.5 ATRs beneath entry, while the take profit is the acceptance value line itself. Now watch the payoff of the idea. The next couple of candles lift steadily, climbing back toward the middle line. Price reaches the acceptance value, and the take profit target is met. You can see the take profit marker right where price rejoins the value line. Because the target sat about 2 ATRs away and the stop about 1.5, the potential reward on this fade was modestly larger than the risk. The long trade is complete. Price doesn't stop there. It keeps pushing higher, and now we get to see the short side unfold. Candle by candle, the market rallies above value and stretches up through the upper trigger band, printing a fresh high. The deviation is now more than 2 ATRs above the acceptance value, the mirror image of what we saw earlier. The stretch condition for a short is in place. Again, the strategy waits for the turn. The next candle opens near its highs, but closes back down, below its own open and below the prior close. That's the bearish turn the code looks for. With price stretched above value and the move rolling over, the sell entry is placed at the bid, marked by the sell marker. This time the stop rests above the recent high, and the take profit is once more the acceptance value line. Finally, watch the reversion play out downward. The last few candles ease lower, back toward the center of gravity, until price touches the acceptance value and the second take profit target is met. Both trades share the same simple logic. Wait for balance. Wait for a genuine stretch. Wait for a turn, and then aim only for the return to value. That's the whole rhythm of range-weighted value reversion. That brings us to the end of our breakdown of range-weighted value reversion. We covered how the strategy builds its range-weighted acceptance value by favoring quiet bars, how it uses a least squares drift filter to insist on balance, and how it fades stretched price back toward value with ATR-based stops and a take profit that sits on the value line itself. We also read through the actual MetaQuotes language code and watched both a long and a short example play out on the chart. Remember, this video is educational content only and not financial advice, a recommendation, or a solicitation to trade. Every strategy carries risk, and losses are a normal part of trading. If you found this useful, please like the video, leave a comment with the strategy you'd like me to analyze next, and subscribe for more MT5 breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.